Hello everybody, I'm Stuart Heath, CEO and founder of Harvard Grace Capital, back with another one of our Nerdy Numbers weekly updates. Well, it's been quite the week we've had since last week. The Fed met and didn't change their interest rate outlook. Did a lot of talking, but no real changes. Retail sales were reported and they declined just a tad for May. The United States, joined the attack against Iran. Iran responded with a fairly feckless attack yesterday. Now there's been a ceasefire agreed to. And then we got the PMI index, which exceeded our expectations. And surprisingly, existing home sales for May actually increased when there was a decline expected. It's been a busy week, much more than we're used to seeing in a week of economic numbers. And to me, the most surprising bit was, I think a lot of us that follow market data all the time expected to get up on Monday morning and see massive increases in the price of oil or oil futures, and a triple-digit decline in the market rates, and the investors of the world seem to just respond to the activities of war over the weekend with a yawn. I think most people saw it for what it was a bully being disarmed in a rather permanent way, and hopefully which will bring stability to not just the region but the world. So, which I think is great economically. It's great for interest rates, which means it's great for commercial real estate and home buyers, which is also great for commercial real estate. At the end of the day, what's good for the world is generally good for commercial real estate, on a regionally significant basis. So we got some things coming up in the next week. There's a lot of Fed governors are independently talking now that they could support a rate cut at their July meeting. I, for one, don't think we're going to see a cut till September. I'll welcome it anytime they want to bring it. But the real question is, what impact will a Fed rate cut have on long-term rates? And because what's really important to people in our business in commercial real estate is, what's the 10-year Treasury going to be? Is it still going to hang out around 4.5? We need to drop 500 or 50 or 100 basis points. So anyway, that's how we see the world. Lots of numbers. We'll put a link to the charts and analysis that we've got. Lots more data coming up. We're at the end of a quarter, end of a month here, coming up in less than a week. Lots to keep looking at. Thanks for watching, guys.